Hi, this is Chuck Oliver with this week's Hidden Wealth Solution Review. Well, have you heard of the 10 times tax deduction? I talked about this briefly in the last video blog, and it got a lot of response, and people are asking, what is this? Well, folks, this is a deduction that's been around in our tax code for decades. It's just now being recognized as something that we found with our tax team to be a viable deduction that can be used to offset somebody moving for their IRAs to Roth IRAs without having to pay the taxes out of their own capital. So in other words, we're using the tax system, right? The deductions inside the tax code system to be able to offset the conversion tax liability, right? Because I'll use the example of the client we helped this week. It's using the least amount of capital to create the greatest amount of deduction in the shortest period of time, right? So when we defer our taxes, we're deferring the tax calculation. So the longer we defer out our money, right, the more we grow Uncle Sam's cut, right, along the way, right, which they love us, right, to do these 401ks and IRAs. You've heard me, you've either read what I've written about this or listened to what I've said about this, right? These are the ticking tax time bombs, right? And this, we're doing a great job of being the IRS's tax money manager, because the bigger we grow our account, the more their account grows at the same time. I want to teach you what you can do to remove your income and your assets from the IRS and Uncle Sam and get your money out of the tax system legally. And this is one of those ways. So he used $100,000 from just lazy idle dollars that really weren't making anything. It didn't, subject him to any taxes. He just used it from like a low yield money market account or savings, or just excess savings, right, in his brokerage account that wasn't in securities. He used this $100,000 and it creates a $1 million tax deduction. Now, how do we come up with using $100,000? Well, it's a 10 times formula. And he and his wife still had about $1 million trapped in their IRAs, which were their former 401ks. This deduction, which is what's referred to as a top line deduction, is able to be used to then take that as a deduction against income. And they don't have a tremendous amount of income in retirement, but they're going to have a tremendous amount of income when the government comes knocking for those required minimum distributions here in a few years, and for more tax, because the Tax Cut and Jobs Act is scheduled to sunset, and all the tax rates are going to bump up, and the deductions that we can write off, like the standard deduction, is going to get cut in half. Tax sale is on. But also the time value of tax deferral. By helping them get more return with less risk, which is great, we're really hurting them long term, because if we're not addressing the taxes, we're growing their tax liability. And the longer you wait, the bigger you mount up that tax liability. So by doing it quicker, faster, cheaper, easier, and doing it with a way to wipe out the tax liability, this is what the 10 times tax deduction is capable of doing. It's not a particular investment, although where you're using this deduction also throws off a very respected yield. But these are the things I'll be teaching you this coming Tuesday at retirementprotected.com. That's retirementprotected.com. I also, for those of you that are real estate investors, we've learned a lot from a lot of you that the tax tail is wagging the dog. The decision with all these big gains over the years that the market's really kind of roared back up since 2010 in your real estate holdings, with the uncertainty of what real estate or this economy is going to do with Iran and Israel and, goodness gracious, Ukraine, Russia, all this stuff that's causing major economic chaos, is a lot of people are saying, well, look, I'm transitioning to that decumulation phase, right? Many of you watching this are saying, well, wait a second, what do I have? Well, you have what's called the accumulation plan, which isn't addressing the things that are pertinent in a decumulation phase transition, right? Taxation, inflation, distribution, preservation, Medicare planning, avoiding up to 85% of your Social Security being taxed, how to avoid or remove yourself from these required minimum distributions, how to not leave a huge tax burden for your children. In other words, having a tax team, legal team, things titled properly, things positioned properly so that you can pay the legal least amount of tax, have income that exceeds inflation, right? And then be able to live more and leave more simultaneously without leaving a big tax burden to your kids. That's decumulation planning. And that's something I'll talk to you about also this coming Tuesday at retirementprotected.com. But the real estate investors out there, this particular client is divesting, we met with this week, out of 7 of their 11 properties. And they realized, look, we don't want to really have the hassle or the burden but we really like real estate, and we like the tax benefits that it throws off, like deductions that you get from real estate. Well, in this particular case, we have a proprietary real estate fund that we have access to for our clients that allows a substantial tax deduction each year that he's divesting a property into this fund. And it's offsetting the tax on the sale of the fund, like the gains and the depreciation recapture, and it's positioning a tax advantage income that's greater by far than the income that was being generated off of having to manage or pay someone to manage these individual properties. So whether you have 1 or 5 or 10 or 11 or however many properties, work with a number of you that have a number of investment real estate, or maybe it's a business you're liquidating, work with a lot of you business owners, or maybe you're just somebody that's just has just done an amazing job of being the perfect government taxpayer as it relates to how well you've saved in IRAs and 401ks. Or maybe you're somebody listening, regardless of age, that you're just a high income earner and you're just getting hammered on taxes. Folks, go to retirementprotected.com. That's retirementprotected.com. Learn how to eliminate taxes from your life. I think of a client, and I'll leave you with this, that he called shortly after tax season, and he had a quick question, and he said, hey, by the way, thank you. We paid no taxes. You zeroed out our taxes. Folks, it is possible. It's all above board. It's all within the tax code. And as Judge Hand, and I said this last week and I'll say it again, there's 2 tax systems in this country, one for the informed and one for the uninformed. Same tax code, just different understanding of how to use it to your advantage. 10 times tax deduction. Learn what it is. Learn how you can remove taxes from your retirement. retirementprotected.com, retirementprotected.com.